Welcome back to the market right here on etnow. Well, yes, a lot of these stocks and sectors will be in focus today, and one such counter will be Tata Motors as well, because the company has come out with a clarification saying that now that the production has been halted for quite some time now, their IT system is getting back on track in a slow and staggered manner. Just yesterday, we had some reports highlighting that how big a hit financially it is going to be on Tata Motors. Almost a 50 million pounds of a hit per week is what some of the reports highlighted, and that really hammered the stock as well. So that is one of the counters that we will be watching out for. We also have on the show Dharmesh Shah, who is joining us. Hi Dharmesh, a very good morning, and firstly help us with your take on Tata Motors itself, because this particular counter has been in the news for quite some time now, but for today a bit of a positive news flow coming in. Are we in to see some bit of a rebound?
Yeah, good morning.
Good morning.
Yes, definitely. I think so. The way that Tata Motors has been behaving in the last few trading sessions, if you look, I think so. Instead, the auto index, it has been one of the most underperforming stock. If you look, I think so. Tata Motors again would see some bit of a selling pressure on the higher side, as major support seems to be placed at around 640, 645. Holding this can keep a pullback options open, but overall we do, I think so, stocks will likely to be into more of a consolidation going forward. That 710, 715 will act as an immediate resistance. So right now, lots of news flows going on in Tata Motors. Would like to avoid Tata Motors market price. I think there are other better options like Ashok Leyland inside the CV space, I think so.
Okay, we seem to have him on a patchy line. Dharmesh will try and reconnect with you. But Sandeep, your take on everything that's been going on with Tata Motors, their JLR arm, the big cyber attack, and of course the financial impact that news agencies globally are reporting. What is your take on this, and what could the next few quarters for Tata Motors looks like? Because it doesn't look like this could be a short-term blip. It seems slightly longer. Do you concur with that?
No, not really, because I think what happened was that this impact happened some time back. Somehow it came into the markets later. And now the company is coming out with a statement that things are stabilizing now. So if I think things stabilize, and given the fact that it's underperformed so much vis-a-vis the rest of the auto pack, and the GST cuts on autos in India will definitely have a positive impact on the domestic business. And the JLR business also with the US-UK trade pact should have started to look up. So I would think that although we don't have an exposure in any of our long-term portfolios into Tata Motors at this stage, it started coming more into value zone rather than at a price where anyone who's holding the stock should be looking to sell.
That's your sense as well? Do you think a major chunk of the selling on Tata Motors is behind us?
So the intensity of selling is steep, and when the selling is very steep, it's very difficult to try and fathom that when the stock will form a bottom. We wait for cues, we wait for decisive signals, whether the signal is oversold, indicators are oversold, the volumes are making a comeback, the selling which has happened has been on the back of reduction of open interest, and then the comeback which happens is on the back of high delivery volumes. If we see those kind of patterns, then we can probably attribute that yes, maybe the major pain could be out for Tata Motors. The biggest concern for the stock was, even prior to this news flow for the stock, there was a lack of participation for Tata Motors with respect to the major auto rally which was going on from the four-wheelers, two-wheelers pack, etc. So I think in that context, from mid of August, there was a point where many of these auto stocks rallied up 15% to 20%, and Tata Motors somehow just about stagnated around the 700 mark. So that I think is a bigger concern for the stock price, the lack of participation in the best of the market trends, at least for the individual sectors, if not for the benchmark indices. So I think we'll wait for the decisive breakout happening for Tata Motors. That level is around 735, 740 mark for the stock price. That would really determine a change of major trend for the stock.
The other stock that's going to be on our radar today is Vodafone Energies as well. Remember, under the US probe, or rather they are now under the US probe for evading solar tariff duties. That's what reports seem to be indicating. Let's see how this situation actually builds up and pans out. Sandeep, the other trend, and this was really a fallout of all that H-1B visa ruckus that panned out last weekend, about the GCC opportunity. do you think that's going to be something material from an investment perspective?
I don't really think so, because I think the entire news flow is so dynamic that it will take some time to settle down, and we don't really know what the next steps will be. So I think we need to any of the segments where the exposure is more onto the US market, or any of the companies which are exposed to the US market so much, we should be careful on them at this stage. As we go to towards the end of 2025, I think things will stabilize mostly.
Right, okay, so that's the take coming in. Dharmesh, hi, good to have you back. Just want to extend that conversation and get your sense on this entire data center GCC play that we're seeing in the market right now. It's a hot theme given this H-1B visa issue that we've seen last week. A lot of new companies are also foraying into real estate. What is your sense on this entire emerging part of commercial real estate, especially the GCCs and data centers bit of it?
Definitely, I think the sector is something the new, I think so, which is coming out, I think so. Inside the sector, I think there's a lot of attraction happening right now. Where we do, I think so, Anantraj is, I think so, the one, I think so, where we see, I think so, the way the volume seems to be panning out in last few trading sessions. I think so, it has surpassed the yearly volume of the last year. I think that seems to be, I think so, something encouraging, and the stock has witnessed a faster retracement of the last leg of up move. We do, I think so, the series of outperformance for the Anantraj for last couple of years, and the current year we have witnessed a profit booking from the level of 900 to 540. Going forward, we believe, I think so, Anantraj is something the one which we like inside the sector, where we can look for target of around 780 to 790. So Anantraj is, I think, the one which we like inside this sector.
Okay, Anantraj, and that clearly is the one evident play in the entire GCC space. But Vodafone, Supreme Court is now set to hear the Vodafone Idea AGR due plea once again. Remember, the central government had informed the Supreme Court that it does not oppose the telecom operator Vodafone Idea's plea challenging that 9,450 crore rupee AGR demand. Let me take it across to my colleague Nivedna Prabhu and try and understand not just the backdrop of the case, but what's likely today.
Well, the top court will continue to hear the matter as far as this is concerned, because remember, the plea that was moved by the company in the top court was to seek the quashing of the Department of Telecommunications move to raise that additional demand of rupees 9,450 crore towards the AGR related dues until financial year 19. In fact, let's tell you the imperative arguments that were made in the Supreme Court earlier when this was heard, because the company had argued that the demand goes beyond the Supreme Court's earlier ruling on AGR liability. The DOT, however, had told the court that the dues are not a reassessment. It had said that the figures arise from the gaps that were identified initially. In fact, the plea argues that the original AGR demand, as confirmed by the Supreme Court in 2019, cannot be changed. But as far as that is concerned, Vodafone had claimed double counting as well. But the Supreme Court bench led by the CJI previously had said that the dispute cannot go on, and there has to be some sort of finality. In fact, DOT also hinted at some softening of stance vis-a-vis Vodafone Idea, saying it's looking at some solution, but they were not opposing the Vodafone Idea plea, but some solution was required, because the most important part in that particular hearing by Solicitor General Tushar Mehta was that the government is also an equity holder, and in light of the larger public interest, the government has also infused 49% equity is what the arguments were made. Now, essentially, that is what happened in the previous hearing. It's going to be heard in the top court. How will this finally pan out? That remains to be seen.
Okay, so that's on Vodafone Idea, and all eyes are going to be on this stock today, since the Supreme Court AGR due hearing is today as well. But Times Network caught up in an exclusive conversation with HAL CMD DK Sunil. He calls the deal between HAL and the Defence Ministry a win-win situation. Let's go across and listen.
This is a great red letter day for us, that we've, I would say, won the confidence of the government. It is a vote of confidence that they've given us a repeat order of 97 aircraft in addition to the 83, aggregating to 180 aircraft. So it's a big win for Atmanirbharta. It's a big win for the ecosystem that we have built and that we are working with. And it also is a very strong statement from the government that we are pushing Atmanirbharta and we are giving those orders which ensures that this will really happen.
97 planes, a 67,000 crore deal. Now it's also a question of delivery. When do you start delivering? When is the last 97th plane delivered to the Air Force?
In all these 180 aircraft, we will finish by the financial year 32-33. So we already have started building the 83, as you know. The 10 aircraft are already ready. We've got 3 engines. And in this financial year, we'll have 12 aircraft ready. GE has promised us that 12 engines they will give us by the end of the financial year. So we are very confident. We've built those aircraft. And now that the production lines are running, we have 2 in Bangalore. The 3rd in Nasik is already ready. The first aircraft is ready, and we will be inaugurated the next month. And the 4th line in the private sector, where we have this private sector partners supporting us and supporting, developing and building the fuselage structures. So we have a very good capacity now, and we will be able to deliver all these aircraft as per the promise.
Sandeep, we've been talking about the entire defense opportunity pretty much since those COVID lows when the markets did identify. And then, of course, last year and a half, defense stocks took a backseat. They were the first ones which did sell off last year as well. Once again, you're seeing heavy order inflow. We're seeing all the geopolitical tensions play out across the world. You know the importance and the significance of defense more than any time now. How should you approach the stocks? Should you be looking to add positions? Has the time gone behind? And for those who are looking at fresh investments, what should they be doing?
I think selectively opportunities keep on coming up as there are periods of correction. So I think the most credible play among the government-owned companies and the defense space remains Bharat Electronics, and I think that's one company which will continue to do well. Then there are so many other companies like even HAL and the shipyard companies, which are a mix of overall demand for ships being built in India as well as defense order flows. So here the valuations are still a bit stretched. So again, we need to look for opportunities where when some corrections come, the overall markets correct and then take exposure. Because the good part for many of these companies is that the visibility is there for years. For most of these companies, there is growth visibility for the next 5 to 10 years, which is something which is lacking in a majority of other industries.
All right, so that's the take coming in on the defense counters, and let's watch out for select counters that Sandeep just highlighted. But with this, let's also get you some of the mid-cap ideas from our experts. And Dharmesh, you go first. Tell us which is the stock that you are tracking and that is looking good to you within the mid-cap basket.
So I would say that the correction which we have witnessed in last few trading sessions, I think so, gives us a good opportunity again to add on to some good mid-cap stocks. And inside the mid-cap stocks, again, I think so the shipping stocks, I think so the one which looks more promising from the current levels, and the way the news flow seems to be floating for most of this for the sector, it looks, I think so there's a long way to go for the sector. I think so inside this, again, we like Shipping Corporation of India. I think so the way the stock seems to be forming the weekly chart, witnessing a breakout. I think so 230-31 has been acting as a major resistance for the stock. I think so about 236 we expect, I think so the stock to head towards 255 to 260. So Shipping Corporation is one, I think so, which we like inside the mid-cap space.